funds itself. I think when we look at different projects, we also do take into account what kind of business model and which sectors do they play, and we take a view of whether that would be regulated or not. And of course, we always want to go for something that is that will fit within the regulations. But for sometimes some of the companies that we see are probably quite innovative in a way that nobody knows how to regulate. But we do see that there is potential, and the regulations will actually come to this space. So I think it's also about knowing the founders, knowing the management itself, having a sense how, what are their perspectives towards regulations and whether this really fits into, in alignment with what we view itself. Yeah.
Okay, great. Lastly, Frank.
Regulation is, kind of both within the traditional finance world and the kind of Web3 world. We understand that regulation can protect the investors' interest, the kind of retail investors, protect their assets. That's good. But from the other side, the too strict regulation can prohibit the innovation, the entrepreneurship, and the ecosystem. So we need to achieve a balance between the regulation and the innovation. So from my side, the regulation can put more focus on the framework of the KYC, AML, and the asset protection. From the other side, the regulation should all encourage more technical innovation, like protocol innovation, DeFi, protocols, exchange, DEX, all of that. So so I hope that there is a balance between the regulation and innovation. Yeah.
Yeah, I hope there's a beautiful unification of both the regulation and the people, what people want. And I think we're running out of time, but I think we can take one question. So is there any question from the audience? All right, please. Any mic for her? Any mic? Or I would lend her my mic.
Hi, I'm Kathy from Actos, the stock-listed Korean game company, and we are developing our first crypto game. My question is, for all the guests here, are you investing in Web3 game or crypto game or gamify projects right now? And if you are investing, what's the top 2 main key points that you are taking as criteria to decide which project, which gamify you are going to invest? Thank you.
Okay, to answer that in short, gamify investments are, I believe, an evergreen space, but the challenges that we are foreseeing is the high inflation in a lot of games, and that most games in the Web3 are not there, are not playable. So if it's an existing game that is there, people are happy to play it without reward for it, and then you add an element of reward on top with a business model that is complementary to it, then it becomes great. But it cannot be the past examples where either the game doesn't exist or people are only playing because you're paying them for it. It's almost, I understand that they are playing to earn, but it cannot be paid to use that, right? It's almost like you're buying customers. That doesn't work. So it's that right mix. And to be honest, a lot of tokenomics on gaming is still being figured out to bring about the best output. And there are even tools which does computations. So if you put in the numbers there on what system and what rewards it is, it can project over the next many years what the output of that token economics is going to look like. And I think more of those numbers and that data will help business and VC determine if it's an apt investment. But I guess for a game right now, the biggest requirement is that let me play it. If I like it, there's more to discuss there.
All right, thank you. Does it satisfy you? All right, wonderful. Thank you all panelists. Thank you, Frank. Thank you, Arthur. Thank you, Wan-Kang. And thank you, Mr. Key. And thank you, Arthur, sorry. That's and Darius. Yeah, thank you very much. Yeah. Jaden, by the way. Thank you.
Thank you very much once again for our panelists and our moderator with the topic Navigation Crypto as a Venture Fund. Okay, we have our next speaker ready with the topic called Designing Decentralized Economics for the Future Enterprise. So without further ado, let's welcome Ms. Lisa Tan, CEO and co-founder at Economics Design. A round of applause, everyone.
Hi everyone, good afternoon. I hope you had a very informative chat just now talking about regulation and creating regulatory framework for this space. As we are approaching a bear market, or we are in the midst of a bear market right now, it's very important to look at how do we further develop and rebuild this space, not just from a regulatory perspective, but also from an economic perspective. It's important to realize that when we're creating all these different economies, we're building a brand new economic system. These ecosystems, these platforms, these protocols are building its own country. Your own country with your own currencies, with your own means of payment, your own monetary policy, your fiscal policy. So today, this is what I want to talk about, token economics, and how do we design a very robust and sustainable economics for tokens. So hi, I'm Lisa, and I'm the founder and principal economist at Economics Design, and we basically build and design very sustainable economies for Web3. And this is the book that I've written. It's the economics and math of token engineering and DeFi, really going into the fundamentals of understanding how do we build token economics. If you heard of the word token economics, you probably hear the word tokenomics, and it's just like a circle. You just draw little lines, and you've got a pie chart to define this is token distribution. We just slap on some vesting period, and that is it. That's tokenomics. But proper, sustainable, good economic system is self-financing, self-sustaining, self-collaborating, self-organizing. And that needs to be added in all the different mechanisms that we have today. So with that in mind, how do we rebuild a brand new economy? If we have the power to rebuild what the code of law is for an economy to run, to exist, and for governance to take place, what does that look like, and how do we do that? And this is exactly what we'll talk about today. This is very relevant if you're a startup, if you're looking at redesigning your economics, or lastly, if you are a VC investing in projects. One of the things that I realized is that nobody knows how to do token due diligence, because that is something very new. Everyone looks at due diligence from a VC perspective, as in your Web2 due diligence. You just look at product market fit and look at the background of people. That's a very good way, don't get me wrong, we should still do that, but understanding token as a new means, as a new asset that we need to do due diligence on, that is something new. And this is what I'll share with you today. So, quick agenda. We're going to start off with why is economics important in Web3? A lot of people still don't understand that. You just put the word economics in there, you put a few formulas that looks very complicated, but actually is super easy, because math is just a language anyway, and people think that that's a very sustainable and fabulous model. There are a lot of intricate things that goes into it, and I want to start off that way. Then we look at the economics design canvas. Just like a business model canvas, you have an economics design canvas to design the economics of the model you're building. And lastly, we're going to assess the various kind of economic risks. So, economics. What is economics? People think of economics as your supply-demand curve. But really, economics are the rules to govern your market transactions and services. Economics is really another way of looking at incentives to drive people to behave in certain ways. When the Fed changes its monetary policy, we're understanding these are the various incentives or disincentives for us to behave in certain way, shape, or form. And your token is really that medium to translate whatever you want them to behave, translate those incentives or disincentives for people to act in that way. So when we look at an ecosystem market, when we look at ecosystems as markets, here we understand how we're going to define and understand different markets. An ecosystem is not just, oh, I've got my buyers, I've got my sellers, or I've got my liquidity providers, or I've got my gamers, I've got my stakers. Here we want to understand what is involved in the economics, what is involved in the market. Why do people want to come into your market? Why do people want to behave in your market? How do people act in your market? This is what we understand from economics, from an ecosystem. It's not just who is in the market, but why would they come to your market? Why would they stay there? And how would they behave in your market? And when people think of economics, you just think of game theory. Oh, token economics, it's just game theory. You just do some math and that's it. That is true. game theory is really a way for us to strategically understand how people behave. But what are the constraints to that? You need to have different incentives and disincentives for people to act in certain ways. So we can do game theory analysis after your economics is done, and it's not something to slap on your white paper and say that, oh, we've got game theory, it's proven and it's done. So Olympus DAO, there are a lot of other DAO with Olympus DAO kind of model where they use game theory as the core thesis of how they run their entire economics model, which is very interesting, don't get me wrong. And this is really an outcome of the various economic models in place. You can't just put the word 3-3 and just define it as a very game theory, robust economic model. So, how do we build an economy? We build an economy in 3 key steps. The first one is to understand the value that your economy brings. Again, an economy is like a country. A platform, a protocol is like a country. There needs to be a reason why people go to your country. Why do people come to Singapore? There are a lot of reasons for that. Why should people go to your economy? There are a lot of substitution effects out there. There are a lot of other games to go into, other DEXs, other protocols to enter. So why should they come to your economy? What kind of value do you provide? Of all the other economies out there, why you? That's the key question you need to answer. And this is very similar to product market fit. It's very similar to understanding your business model. Why should people come to you? What value do you bring to them? And this is our first step in understanding the economy. The second, what are the rules in this economy? As I mentioned, when we create this brand new economy, when we create these protocols, we're writing the rules of the game. We're writing the code of law for how people behave, interact, and act in your ecosystem. So when we talk about rules, we need to think about who are the buyers and sellers in this market. This market being your economy. It could be a metaverse, it could be a game, it could be a DeFi. Who are the buyers and sellers? What are the key drivers of buying and selling in this economy? Second, what are the key transactional economic pathways? So this is really your activity. People come in to trade with each other. A country exists for people to come into this common ground to trade and transact. That's why we have contracts as well. So what are the economic transactional pathways we want to encourage in this economy? What are the rules of trade in this economy? That's what we want to define. And lastly, what are the rules the assets are governed by? So we realize, number one, we understand who is in the market, the buyers and sellers. Number two, we understand what are they selling and buying? What are they exchanging with each other? And third, they need to exchange something. It could be a stable coin, NFTs, fungible token, non-fungible token, tradable token, non-tradable token. Doesn't matter. When they go into an exchange, when they go into a transaction, they're exchanging something of value. That value can be tokenized, it doesn't have to be traded, but a token is anything that represents value. If your ecosystem comes, when we're building an ecosystem, they're coming together and they're not trading anything, there's no reason for them to be in your ecosystem. So it's important for us to understand what are these assets that they're trading and what are the rules these assets need to be governed by. Because remember, you're creating these assets, you're creating the currencies, you're creating the NFT, you're creating the monetary policy, fiscal policy, supply rate, inflation rate, rules that these assets are governed by. So these are rules that we need to think about as well. And lastly, how do you manage funds in this economy moving forward? So the first step, the first question of how do you define the economy, what value does it bring, this is really an introduction, step one of the entire process. Step two is defining the rules of how people behave and interact and trade in your system. And step three is how do we make sure that this ecosystem is going to be self-financing? You can't keep getting investors' money or fundraising money or VC money, or you keep doing token generation activities to fund this entire activity. So how do we manage the funds in the economy moving forward? This is something when the project is live, and this is more about treasury management. So if we put that into context, these are the 3 pillars that we have in defining and creating the framework for economics. Just now in the previous panel, we talked about creating legal frameworks. And legal frameworks is very important for an entire country from a macro market. In this micro market that we are creating, this country that we are creating, we need to have the economic framework that we live by. So the first one is market design. So market design is understanding our first question. Who is in the market? Who are the buyers? Who are the sellers? Why do people want to come to your market? What kind of people are coming into your market? Are there rules for participating in the market, or people get to participate nonetheless? Are there a lot of people to participate in? Is there congestion in them working with each other? Maybe there are too many people that they could work with, too many LPs to work with, or too many developers or too many NFTs that they could buy, and this will hinder transactions from happening. So understanding what's in the market, how do people behave in the market, and what can people do in the market. The second thing is mechanism design. Mechanism designs the rules of the game. So just now we talked about the rules of trade. How do people interact with each other? What are the transactional pathways and what are the rules guiding that? So if you're a business person, you probably sign a lot of contracts. These different contracts are the constraints in which we can interact with another person. For example, an NDA. An NDA will list the do's and don'ts in a contract. And we are dictating all of these in the mechanism of this ecosystem. Here we look at governance, non-financial incentives, and structure. So governance, how do you make decision? What's the decision-making protocol? How do people make decisions in the space? A lot of people will just use the word, oh, it's just a DAO. We just give DAO tokens and people get to vote and people stake their tokens and we make decisions. Yeah, sure. But is it one person, one vote? Is it going to be by majority? Is it going to be a weighted average of the number of people staked? Do you have a quorum to maintain a certain number of people staking the tokens to arrive at a decision? So there are a lot of different things we need to think about in mechanism design. It's not just about, okay, you can do this and you cannot do this because you have certain kind of tokens. In mechanism design, we need to think very holistically. If we're creating rules of the entire economy, what are the rules we need to think about? Put on the hat of a government. You have to think of monetary policy, healthcare policy, education policy, and what does that look like in your ecosystem? Whatever that's relevant to one ecosystem might not be relevant to another, but it's still important to think about them from a holistic perspective of mechanism design. And lastly, token design. Token design is really what are the assets and what rules do the assets need to follow by. So for example, you might have just a currency. You might have NFTs. You might have fungible tokens. You might have like ERC 1155, where you can combine a lot of assets together to create a brand new asset that's super fungible and customizable. So there are a lot of different rules that we need to think about. Tokens are not just one thing which is a currency. And you also have to think about all the other types of tokens that's tradable or non-tradable. Soulbound tokens, different kind of NFTs, NFTs that represent reputation, or non-tradable assets that help you to figure out how much tokens to award to different people in your daily vesting schedule, for example. So there are a lot of different things that we can start customizing in token economics. And whether you're designing games or DeFi, NFTs, MetaMask, anything, there are a lot of economics that goes into these systems because we're not just creating the economic rules for the asset itself, but the rules to allow the entire ecosystem to abide by. So what does that look like? How do we put things into a very simple canvas where we can just use the canvas and start ideating? It's not that you need to start creating and answering every single thing. With this, it's not about creating the whole financial model or forecast model for your investor. But this is a very simple and easy, low-effort way to start thinking about what economy looks like. How do you start brainstorming on building a very decentralized economy? Because if it's completely centralized, then you are basically a dictator to say what works and what doesn't work. But because it's decentralized, we need to put rules embedded in this system. When people come in and people want to change and update the system, they have the liberty to. So what does that look like? The first part of value proposition, here it's the first question that we answered just now. Why should people come to your ecosystem? There's so many ecosystems out there. There's so many other games out there. There's so many decentralized exchanges out there. There's so many other NFT projects out there. Why should they come to you? Just understanding that will be a very good way for us to get started. Why? Because this is the key demand driver of any protocol that you're creating, any value that you're providing in this system. Then we looked at market mechanism and token design, which we discussed just now. These three are, what are the rules of this economy? So we have rules in terms of the market. Who are the users? The rules for the users. The rules for exchanging and trading in the system, which is your mechanism design. And the rules of the asset, token design. What are the rules that all these different kind of economic agents, economic activities are being governed by? This is everything we think about in economics. So in market design, we look at economic agents. So economic agents are basically people, or whatever users in the system. Not just people, but also think of smart contracts as economic agents because they can behave in certain ways, they can execute certain things, and it will impact our entire economy that we're building. The second thing is key transactional pathways. So what are people trading? What are people transacting? Why? What are they doing with each other or with the smart contract? Listing them down and understanding that will give us very good insights to understand key demand drivers and supply drivers. Lastly, key assets. What are the assets that will be in place? We don't have to write down the policies of these assets, just is there going to be a stable currency? Is it going to be a utility token? Is it going to be SS token, NFTs? We write them down. In mechanism design, we look at governance. Again, remember, the goal of whatever we're talking about is creating a decentralized economy. So about governance, it's not just how do you govern it as a centralized authority, but a decentralized governance, how do you distribute decentralized power to all your economic agents in the space. And then we looked at desired and undesired behaviors. So this is where a lot of people talk about good actors and bad actors, because they behave in certain kind of ways. It's not just about the actors being good or bad, it's more about the behaviors. Remember, economics is all about the various incentives to drive certain kind of behaviors in the economy. So what are behaviors we want to incentivize and behaviors we want to disincentivize? From that, it gives us a very good understanding of what rules should be in this space. And lastly, we have our tokens, token design. So how do we design the various kind of tokens in the space? What kind of rules should these tokens abide by? And at the bottom, I don't know if you can see, but it's treasury, looking at inflows, balances, and outflows. How do we manage that? And so what does that look like in terms of a bigger canvas? So there's different kind of questions that we ask and different kind of questions to get people to start thinking. You don't have to follow it directly, but this is some inspirational questions. And I just want to go into a few more examples. So for value proposition, for example, how do you attract your economic agents into your ecosystem? Why should they be interested in your ecosystem? So these are different questions you think about in each of these little boxes. And so key assets and transactional pathways. An important thing to think about is, things like what are the assets and intended transactions? Because there are a lot of assets that you can create. How are the intended transactions different for the different kind of assets you create? So for example, you've got currencies. And you want currencies as a means of payment. A means of payment is your intended transaction. You want people to use that to be transacting more often. As opposed to, say, an NFT that captures value, that stores value. You don't want to create an asset, like a currency, with the intended transactions of storing value, because that wouldn't make sense. With currencies, you don't hold currencies to store value. That's why people don't hold a lot of money in their bank. They usually hold bonds or they hold different kind of assets. So it's important, I know these are very basic and you probably all know about that, but how do we extract this information out to build a very robust economy that we're looking at? In different kind of mechanism token design, here we're looking at different kind of timing considerations and fee structures. So one of the things that you saw just now in mechanism design is bargaining protocol. Bargaining protocol is not just about people bargaining and figuring out a price. Bargaining protocol is how do we determine prices of assets being transacted. These are the rules, transactional rules, mechanism design rules of how people transact within the system. What does bargaining protocol look like? Is it time constraint where you have X amount of time to negotiate and figure out how to buy these assets? Or is it going to be, say, an auction structure where you have different kind of auction mechanisms involved with a time constraint using first price auction or second price sealed bid auction to determine prices of assets? And with fee structures, there are a lot of different fee structures to consider. If you're looking at creating an NFT and it goes out to the secondary market, there's certain kind of royalty that goes back into the treasury. And these are things that we need to start documenting and thinking about because it will impact the entire economy that we're building. And treasury at the end will be just how do you manage and balance treasury. So in summary, everyone should think of token economics as in the design of the token. Everyone thinks of token economics as in design of the tokens, but actually token economics is designing the entire economy. That's why it's called token economics. That's the word economics in there. It's not called token design. If it's token design, you just design the token. But we are designing the entire economy that the tokens exist in. It's not just as simple as just figuring out how to create a circle, draw lines to create pie charts, and that's it. So it's a little bit more sophisticated than that. And you realize that we talk about market design and mechanism design, where we define what the markets are, the rules of the market, the economic agents, and then the rules of trade and transactions. Token is really the last part that we speak about, the last pillar, token design. So you need to understand what your market is, what the transactions are, the rules of markets and rules of transactions, before we even start talking about tokens and the rules governing tokens. And it's very important to start nailing the economy first before we look at exploring other areas. So with the remaining amount of time, I do want to open the question to the floor because this is usually a topic that people have a lot of questions on. So if you have any questions, just raise your hand and I'll be very happy to answer them.
Hey, you already know me, but Intrinsic Global, we do, I'm Jordan from Intrinsic Global, we do GameFi solutions. We just recently did Guild of Guardians on Immutable X, which is a mobile dungeon crawler. I was just interested in what you said about doing your tokenomics design or what came before that, and you prioritize that over game theory, and people often making the assumption of doing game theory first. I thought that was an interesting statement because you also had value proposition up the top from before. So I'd be interested to know more about how you're understanding the differences there, because our assumption is like, make the game fun as the reason why people come to the market. So keen to hear what your thoughts are there.
That's a very good question. And I think when we talk about game theory, I'm looking at game theory from an economics perspective, where we're looking at different strategies and behaviors people can create to make sure that this is a binding activity. So going back to games, where we talk about game theory in your perspective, which is the theory of why games exist and gameplay specifically, we work with a lot of games, and usually we get the gameplay nailed first, at least 65%. Why should people play the game? What are the rules for the games? How do people interact with the games? And are they there to kill monsters? Are they there to go to battles with each other? Are they there as a social game? You know, there are different kind of MMORPG kind of games, and understanding what that is, because that will go into our desired and undesired behaviors. So from there, we can create the right kind of incentives. But going back to game theory, I'm talking about economics game theory. This is where we use game theory to prove how well the entire economy is being designed. So what is game theory? Game theory is really understanding, given that you have so many decisions to make, and every individual has so many behaviors that they could take, what's the most likely behavior that what's the most likely behavior path of action that they would take? So that is what game theory does. So what we do is we figure out, we create all these different things, we build the entire economy and build the entire model. Then once we finish the financial model and economic models in spreadsheet, then we do our checks and balances by looking at, given all these different behaviors that an agent can behave, how likely are they to do desired or undesired behaviors?
Thank you. Thank you for the presentation. The question is from me regarding of what the whole canvas that you've mentioned, and it's the whole process, right, of creating the tokenomics, basically, for the thing. And it's a long time process, right? So what is the component that you're usually, or maybe, I don't know, out of your experience, that you're mostly struggling with? And maybe it depends on the, project to project, but, if you can elaborate on that would be good. Thank you.
That's a very good question. And as you're right, project to project is very different. So for example, with games, in general, the economy is pretty much defined, right? So in games, it's more of figuring out the right incentives or the right utility for assets to be created. As opposed to in DeFi. In DeFi, usually we talk a little bit more about financial engineering. So how do you structure a perpetual swap with different kind of risk mitigation mechanisms in place to create a certain kind of NFT for your product? So you're right, they're all token economics. They're all talking about economics for a specific kind of economy, but the kind of detailed intrinsic knowledge that you need will be quite different. So for DeFi, it's a little bit more financial engineering. With games, it's a little bit more game theory, mechanism design, and game design kind of concepts. But good question. All right, I see that my time is up. So thank you very much, and I really enjoy speaking with you guys.
Thank you very much. There you have it once again. That was Ms. Lita Tan with the topic Designing a Decentralized Economics for the Future Enterprise. Without further ado, let's invite our next speaker, Myrtle Ann Ramos, founder and CEO at Blocktides PlaceWar, with the topic Future of Tokenization and Branding. A big round of applause, everyone.
Hello. Thank you so much. So now at least there's people, right? So I don't want to be boring enough, so I'll just wait for this. And for the best question, so I'll choose one winner. Basically, I'm also KOL of CoinMarketCap, and now the official Binance feed host and creator as well. So guys, it's just been approved. So So, she mentioned earlier what is token economics, so it's a perfect timing for us to, of course, talk about how tokenization will reshape the future of financial markets. Oh, okay. All right, so later I'll choose one winner of $100 for the best question. So that's real. We do giveaways, by the way. So, yep. How can I use this, by the way? The green one, okay. So tokenization. So a lot of people doesn't really know what tokenization is. And of course, I'm just here to talk about it in layman's term. So she talked about in details earlier the presentation about what is token economics. But of course, tokenization can really be applied even without cryptocurrency, guys. All right, so with this, of course, you can see, I will not read it. So it's really the process of converting anything when it comes to tokenized assets, at the same time digital tokens. So it's not limited when it comes to cryptocurrencies, by the way. And of course, what's really the purpose of blockchain technology? Yes, this is overrated, but it's really for us to cut out third-party intermediaries. Actually, there's this one person asked me, why don't you want to actually manage KOLs? So I told him, the purpose of actually handling KOLs is you going to be a middleman for that. So that's the reason why I don't want to handle KOLs, because of course it's more better for the KOLs to directly actually get the incentives and rewards of each and every rewards from the project. So tokenization creates a lot of opportunities, especially in digital identity. So I just want to share news about the proposal in the Philippines that there's already an app that's that's being proposed for the Philippines to actually adapt when it comes to blockchain voting. I know it exists somewhere in India already when it comes to blockchain voting. So what's really in it for tokenization? So way back, let's do a throwback, of course, internet and of course the blockchain. So when it comes to the internet, way back, so it's ISPs, and the protocols are basically the ones that you can see at the back of your routers, which is TCP/IP, and then HTTP DNS, and FTP, file transfer protocols. But in blockchain, of course, you can see full node, miners, staking protocols. If you're familiar with mining now,